Ramalingam, Chief Officer or Chief Technical Officer with Bajaj Allianz, joins us now. Mr. Ramalingam, this is Nikunj Dalmia from the studio. What we understand from our sources is that there could be a new dynamism in the way how insurance pricing could be done. And I'm just breaking it for our viewers, which is that today, if you buy a car insurance, you have to buy the car insurance for the entire car. Now looks like the regulator is considering that you can buy insurance for the tire and for the windshield separately, for the engine separately, and for a stereo system separately. Is that going to be good for the business or bad for the business?
Yeah, good morning. I think, what you're talking about is still a bit long way. But what now we are looking at is basically the pay as you use kind of a thing. So today what happens is you pay a premium for 1 full year, but if you don't use your vehicle for, let's say, half the time, then you are actually paying the premium for 365 days when you're using it only for 180 days. So pay as you use is something where you only pay for the time that you use the car. So these are some of the things that is already there on the anvil. The regulator has already given a lot of freedom to the insurance companies to come up with new products, new features and things like that. And as you will see in the next 6 months, you will see a lot more innovations coming in the motor space. And that could include what you're talking about, but these are all in the initial discussion stage.
These innovations, they have to be governed. They have to be monitored. So that is additional cost which the insurance companies will have to bear. The insurance premium in India, my understanding is not very high. So as it is, this is a very thin margin business. With the exception of 5-6 companies, nobody makes money. So while it all sounds nice, pay as you use, a la carte menu, you may drive your car 5 days, 2 days. I'm not going out for the weekend. I'm going on a long holiday. I will not pay. But is it feasible?
See, the thing is that what we are trying to look at as an industry, as you rightly said, motor is a very, very competitive market. And obviously, very few companies are making money because a couple of things have happened. One is basically, if you see all the new age cars which are coming in with very high technical gadgetry, which are expensive. And in case of any accident, the cost of repairs is also increasing. So average claim size is increasing. But at the same time, I think we as insurance companies and as insurers and as competitors in this market are also required to come out with some new kind of innovation which can keep us ahead of the market. And in this space, you learn as you go along. And I'm sure that in a year or 2 years' time, I think these things will stabilize. In the initial stage, we will also look at how the market is behaving, how to do the pricing. And then as we go along, I think things will kind of stabilize in a year's time or 2 years' time.
Ramalingam, good morning. The IRDA also had the expenses of management limit of 30% for general insurers. As it's going to be a single limit expense of management, how much of a positive do you see this move as?
No, I think it's a good move. This is something which the industry has been asking for some time. And it's good that now the regulator is also looking into it. And hopefully maybe by the end of this month, we'll have some news on that. And it's a very positive move as far as the industry is concerned, and we welcome that.
Okay. I just wanted to understand a little bit more about the kind of demand across products. Is there, according to you, a rise in disposable income? Are we seeing an overall increase in demand for individual products? And if you could walk us through what your observations have been?
Yeah, as you can see, the overall retail lines are actually growing. The industry is growing at around 12 to 14%. And motor and health are actually leading the way. And when you look at the roads today, I think after the pandemic, I think the kind of traffic jam we are seeing, the number of vehicles that are on the road. And as you can also see, so many vehicle bookings are already there, which is taking 3 to 6 months for cars to be delayed. So we see that there is a huge demand which has come in. Similarly, in respect of health also, we see there is a huge demand after the COVID. The awareness about health has gone up substantially. The new segment that we are seeing a big rise is also on the electric vehicle. That's one new segment, which I would say that once the prices kind of stabilize, this will also see a huge uptake. And that should show further growth as far as the electric vehicles in the motor segment is concerned.
Good morning, sir. There are certain draft regulations also that are out where they're talking about the expense cap. Some of that we've talked about. Now, if there's going to be a cap also for expense for commission, there is a case for both life and non-life. There is a case that is being made that this is good news for the small insurers, and this can also be good news maybe for aggregators, the likes of Policy Bazaar and many others. Would you concur with that view?
See, I think what it does is that it kind of puts a control on the companies also to the extent of how much you want to pay out. And, it's a good that wherever we want to look at good business coming in, you can look at offering higher commission. And for where the business is not making sense, you can control commissions in those places. But once the regulations come out, I think we'll have a much clearer view on how this needs to be taken up. So maybe we'll have to wait for a week's time before we get the final comments from the regulator.
Thank you so much for joining in and giving us a view as to what exactly this is going to mean for some of the general insurance players. Do remember, the IRDAI has proposed that a denotification of the existing norms, essentially allowing a choice to insurers to have the freedom to design a product, fragmented insurance in motor, engineering, and real estate.